When we sit in front of our screens, we are all essentially looking for the same thing, the direction of the next move. Our eyes are fixed on candlesticks, indicator crossovers, support, and resistance lines. However, on the screens of titans like Dalio, who manages billions of dollars and has written his name in the golden annals of financial history, there is a vastly different picture. While most investors focus on what the price is doing at that moment, where a specific candle closed, or whether a pattern has broken, Dalio looks at why the price is forced to make that move. Today, we will examine Dalio's world-renowned investment philosophy, that massive mechanical system that goes far beyond classic technical analysis, and how we can integrate this system into our own trading strategies in meticulous detail. To truly understand Dalio's approach, we must first accept this fundamental truth through his most famous quote: "The economy and the markets are, in fact, a simple machine working like clockwork." Yes, when we look from the outside, we see a chaotic structure shaped by the decisions of millions of people, but Dalio sees the simple mechanics behind this chaos. He often says, "I don't read charts, I read the system." What does this mean? According to him, markets do not move randomly. They work based on specific patterns. But the critical distinction here is this: these patterns are not just price-based, they are based on a much deeper cause and effect relationship. In other words, the RSI, MACD, or moving averages you see on your screen are actually just outputs. They are results. The real data consists of the inputs that produce those results. If you do not understand the inputs, namely the real source of money and the dynamics of debt, the lines on the screen will only tell you a fairy tale of the past, not the map of the future. You can see your speed by looking at a car's speedometer, but to understand when the engine will overheat or when the fuel will run out, you need to pop the hood and look inside. This is exactly what Dalio does. This massive analytical structure, which Dalio calls the macro engine, consists of three interconnected main layers. The first and perhaps most dynamic layer is liquidity, the direction of money flow. In any market, whether it's a stock or a crypto asset, fresh money must enter for the price to rise. So, where does this money come from? Naturally, from the top of the system, the central banks. Every morning, Dalio asks himself, what is the central bank doing right now? Is the money supply expanding or contracting? How are interest rates affecting the cost of money? If a central bank is raising rates and pulling liquidity from the market, even if you see the most perfect bullish formation on a chart, the probability of that formation working collapses statistically. Because the engine is running out of fuel. Liquidity is the oxygen of the markets. Trying to run a marathon while oxygen is decreasing only leads to exhaustion and eventually failure. The second layer is the debt cycle. According to Dalio, the economy actually revolves around debt and credit. There are two main cycles here, the short-term debt cycle and the long-term debt cycle. Short-term cycles are what we call business cycles, usually lasting 8 to 10 years, where the economy revives and then slows down. However, the truly dangerous and decisive ones are the long-term debt cycles that last 50 to 75 years. Dalio analyzes it this way. Is the system currently accumulating leverage, or is a deleveraging period where debts are painfully wiped out beginning? If a system has reached the point where it can no longer carry the debt burden, no matter how strong the technical support in asset prices is, those supports will be torn like paper. Dalio issues a very stern warning here. Any investor who does not understand debt dynamics is destined to eventually be crushed under a major collapse. Because credit is pulling your future spending power into today, every penny of debt you spend today is, in fact, spending you will not be able to do in the future. The third layer is positioning, where the players, the crowd, are standing. Dalio views the market through the lens of crowd psychology. If everyone believes an asset will rise, and everyone has already bought it, there is no one left to push the price higher. In technical analysis, we call this overbought, but Dalio reads it as a mathematical equilibrium problem. If everyone is on the same side, the ship tilts that way. At the slightest bit of negative news, those trying to be the first out the door will create a massive stampede. When this triple structure, liquidity, debt cycle, and positioning comes together, it becomes clear as day where the price has to go. Dalio's greatest advantage in the market is his belief that everything is a cycle. This perspective transforms him from an ordinary trader into a decision engineer. For Dalio, nothing happening today is actually happening for the first time. By examining the last 500 years of history, he has mapped out similar crises, similar rallies, and similar imperial collapses. His working method is entirely scientific. He finds all similar events in history, creates archetypes or templates from them, and compares today with those templates with millimetric precision. Then he writes entirely mechanical if-then rules. This is an approach completely devoid of emotion. If liquidity increases, assets rise. If debt becomes unsustainable, a crisis occurs. It is a logic so simple yet so unshakable. This approach takes analysis out of the realm of personal interpretation and turns it into a fully systematic model. But is it just this technical and macro knowledge that makes Dalio successful? Definitely not. What makes him a legend is how he applies this knowledge. At the heart of Dalio's system are three massive pillars. The first is the total elimination of the ego. Despite managing billions of dollars, Dalio starts every trade by saying, "I might be wrong." While most investors try to prove to the market that they are right, Dalio tries to hear what the market is whispering to him. The phrase, "I might be wrong," is his greatest armor. This way, the moment he realizes he made a mistake in an analysis, he immediately updates his model instead of insisting on that mistake. The second is radical truth. Reality can sometimes be painful. The market may go in the exact opposite direction of what you expect, and your most trusted model may collapse. Dalio says, "Reality is reality. Accept it and deal with it." Most people fail in the market because they choose to believe the lies they want to hear instead of facing the truth. The third pillar is the mechanical decision system. Dalio never trades based on feelings. There is no room for emotion in his trading room. Every decision is based on logic tested with historical data. This process of back-tested thinking eliminates the randomness of decisions. If a rule has worked in 80 out of 100 similar situations in the past, Dalio applies that rule and does not wait anxiously for the result, because he is already aware that he is playing a game of probabilities. At this point, his most underrated weapon comes into play: diversification, or the Holy Grail. Dalio's system is not built on striking it rich from one big trade. On the contrary, he builds a portfolio of 15-20 different trades that have no correlation with each other. This is a mathematical miracle, because when unrelated trades come together, your risk drops dramatically while your return potential is preserved. This is why Dalio's fund, Bridgewater, has managed to stay afloat even during the world's biggest crises. Dalio's life philosophy overlaps exactly with his market philosophy. He says, "If you worry, you don't need to worry. But if you don't worry, you should worry." This is a testament to his obsessive respect for risk management. If you foresee risks and include them in your system, those risks cannot destroy you. But if you ignore risks and say, "This time will be different," the market will ruthlessly liquidate you. His 5-step success cycle is also a manifesto that every trader should hang on their wall. Set goals, identify problems, find the root cause of those problems, design a solution, and apply that solution with discipline. Most investors give up at the second or third step, searching for the root cause, and blame the market, the whales, or luck. Dalio, on the other hand, looks in the mirror and asks, "What is missing in my system?" Now, let's look at how to bring this massive philosophy into our own small world, our own screens. If you already have a system that uses technical analysis tools, indicators, and price action structures, Dalio tells you that you need to add a macro bias layer on top of this system. What does this mean? Suppose your technical analysis gives you a buy signal. In the past, you might have entered the trade as soon as you saw this signal, but with the Dalio approach, you will now stop and ask yourself, does the current liquidity cycle support this purchase? Does the central bank's interest rate policy prepare a suitable ground for this asset to rise? And most importantly, where is the crowd? If everyone has already bought, do I have an advantage in this trade? This perspective turns you from being just a chart reader into a system architect. Classic technical analysis gives you the answer to what is the price doing, but the Dalio approach gives you the answer to why does the price have to do this? The difference is like being tossed around on top of the waves versus setting sail knowing the direction of the wind. You don't need to be a genius to be successful in Dalio's world. You just need to be humble enough to accept reality, disciplined enough to build a system, and patient enough to understand the cycles. In conclusion, Ray Dalio proves to us that technical analysis is just a tool, and that the real power lies in understanding how the system works. The future is a place of artificial intelligence and massive oceans of data. Dalio prepared for this future years ago by coding his own principles and establishing AI-supported decision systems. What we need to do is go beyond the charts, leave our egos at the door, and discover those invisible but unshakable cause and effect relationships of the market. Because as Dalio said, those who understand cause and effect relationships win. Others just wait for luck to smile on them. The market is not a casino, it is a data problem. To solve this problem, you need more than just lines. You need a solid mindset and a flawless system. If you manage to add this macro depth to your own micro-analyses, you will not only learn to predict the next move, but also how to remain steady within that move. Remember, your greatest advantage is not how much you know, but how faithful you remain to the truth. I wish you profitable and systematic days.